Wall Street wants to turn small modular reactors into the next AI trade. But AI demand is not the hard part. The hard part is surviving the regulator. That is why Oklo and NuScale are not the same story. Oklo has the sharper AI narrative. NuScale has the stronger NRC position. And in nuclear power, that difference matters. Because the market can price a story very quickly. But reactors do not get built on stories. They get built through licensing, fuel, contracts, construction, and unit economics. So the real question is not which stock has more excitement. The real question is which company can survive the gap between AI demand and nuclear reality. That is the SMR survival game. And right now, it has one brutal split. NuScale has the license edge. Oklo has the narrative edge. But neither company has fully proven the commercial model yet. That is the conflict. And that is why this story matters. Why now? The AI trade has changed. At first, the market focused on chips. Then it focused on cloud spending. Then it focused on data centers. Now, the bottleneck is moving deeper. It is moving into electricity. Not software. Not another chatbot. Not another semiconductor multiple. Electricity. AI data centers need massive power. They need reliable power. They need power that can run through heat waves, grid congestion, political fights, and local permitting delays. That is why nuclear is back inside the AI conversation. Not because nuclear is new. It is not. Nuclear has been around for decades. But the market is looking at it through a different frame now. The old nuclear story was about clean energy. The new nuclear story is about power scarcity. That is a major shift. And small modular reactors sit right in the middle of that shift. The bull case is easy to understand. If AI data centers keep growing, then electricity demand keeps rising. If electricity demand keeps rising, then hyperscalers need long-term power supply. If the grid cannot move fast enough, then advanced nuclear becomes more interesting. That is the simple version. But the simple version is not enough. Because nuclear is not like buying more GPUs. It is not like adding more servers. It is not like signing another cloud contract. Nuclear has a different clock. It moves through the regulator. It moves through the supply chain. It moves through utilities. It moves through local politics. It moves through fuel availability. And it moves through years of engineering proof. That is why AI demand is obvious. Regulatory survival is not. And that is the hidden variable in this episode. Hidden variable. The hidden variable is not whether AI needs power. It does. The hidden variable is whether these companies can convert AI power demand into licensed, financed, operating nuclear assets. That is a much harder test. NuScale and Oklo are both linked to the same macro story. AI needs electricity. The grid is under pressure. Advanced nuclear could become part of the solution. But the companies are not positioned the same way. NuScale looks more like the regulatory leader. Oklo looks more like the narrative leader. That does not mean one is automatically better. It means the market is pricing two very different risks. NuScale's US 460 small modular reactor design received standard design approval from the NRC in 2025. The NRC page describes the design as a light water SMR, with 77 MW per nuclear power module, 6 modules, and total plant power of 462 MW. That matters. It does not mean a plant is already operating. It does not remove project risk. It does not make the economics easy. But it gives NuScale something rare in this sector. A regulatory credential. That is the NuScale edge. Oklo is different. The NRC says it is currently engaged in pre-application activities for the Aurora powerhouse. The NRC describes the proposed Oklo reactors as liquid metal-cooled, metal-fueled fast reactors with a maximum power level of 75 MW. That is a different technology path. It is more advanced. It is more differentiated. It may be more attractive to some large power users. But it also carries a different licensing burden. And Oklo has history here. In 2022, the NRC denied Oklo's Aurora combined license application without prejudice, citing Oklo's failure to provide information on key topics for the Aurora design. That does not mean the company is finished. Without prejudice means it could come back. But it does show the central risk. The story can move faster than the licensing file. That is the part the market cannot ignore. Then came the new development. In 2026, Oklo announced DOE approval for the Nuclear Safety Design Agreement for its Aurora powerhouse at Idaho National Laboratory. Oklo also said it requested DOE review of its preliminary documented safety analysis. That gave Oklo a new policy and demonstration pathway. It also strengthened the narrative around federal support. But the key distinction remains. DOE progress is not the same thing as full commercial NRC approval. That is the market tension. Oklo has a powerful story. NuScale has a stronger licensing credential. But both still face the real-world test. Can this become bankable power? Bull case. The bull case starts with one idea. AI is pulling electricity into the center of market pricing. For years, investors treated electricity as a boring utility input. Now, it is becoming a strategic asset. Data centers are not just buildings. They are power demand machines. They need land. They need transmission. They need cooling. They need long-term supply agreements. And they need reliable baseload power. That is why nuclear has become investable again. Not because every nuclear company will succeed, but because the market is searching for power solutions that can match the scale of AI demand. This is where Oklo gets attention. Oklo has the kind of story the market understands immediately. Advanced nuclear, small reactor, AI power, Silicon Valley connections, potential data center relevance, federal demonstration pathway. That is a powerful combination for a narrative-driven market. And the 2026 Meta-Oklo agreement strengthens that perception. Oklo said the agreement supports development of power infrastructure for future data center capacity, while Meta described nuclear agreements with Vistra, TerraPower, and Oklo as part of its broader push to support AI leadership and grid reliability. That is why Oklo can trade like a high-duration AI infrastructure option. It is not just a nuclear name. It is a bet on the idea that hyperscalers will eventually need dedicated power platforms. But NuScale has a different bull case. NuScale's bull case is less about narrative speed. It is about regulatory credibility. The market may eventually decide that in nuclear, the company with a clearer NRC path deserves a different valuation framework. NuScale also benefits from being more familiar to regulators. Its technology is based on light water reactor design. That can matter, because the regulatory system understands light water reactors better than it understands many advanced reactor concepts. NuScale's standard design approval does not solve all problems, but it reduces one major uncertainty. It tells the market the design has crossed a meaningful regulatory milestone. In a sector where most companies are still promising future approvals, that is not small. So the bull case for NuScale is this. If the next stage of AI infrastructure requires nuclear projects that utilities and power buyers can actually finance, then regulatory readiness may matter more than marketing momentum. The bull case for Oklo is different. If the next stage rewards faster-moving advanced nuclear platforms tied to hyperscaler demand, then Oklo may keep the stronger story. That is why this comparison works. They are not fighting the same way. NuScale is trying to look more licensable. Oklo is trying to look more strategic. Bear case. The bear case is where this story gets serious. Because nuclear is not a normal growth sector, it can attract massive enthusiasm. Then it can run into hard physical limits. Permitting, cost, construction, fuel, safety case, power buyers, timelines. That is where the market can misprice the story. NuScale already learned this the hard way. In 2023, UMPS and NuScale mutually agreed to terminate the carbon-free power project. UMPS said the project was unlikely to achieve sufficient subscription to remain viable. That matters, because it shows that regulatory progress alone is not enough. A nuclear project also needs customers. It needs cost confidence. It needs political support. It needs long-term buyers who can live with the price. And it needs financing that still works when estimates change. That is the NuScale bear case. The company can have a better regulatory position and still face a brutal commercialization test. A design approval is not a revenue engine by itself. It is a credential. The market still needs to see real projects, real power buyers, real cost curves, real construction execution, and real evidence that the plant can produce power at a price customers will accept. Oklo has a different bear case. Oklo's risk is that the story is moving ahead of the proof. The company has an attractive strategic frame. It has AI relevance. It has a differentiated reactor concept. It has a DOE pathway. It has major attention from investors. But the NRC history matters. When the NRC denied the earlier Aurora application in 2022, the issue was not market demand. It was missing information on key design topics. That is the risk. Not that AI demand disappears. Not that nuclear becomes irrelevant. The risk is that regulatory evidence, engineering evidence, and commercial evidence take longer than the market wants. And in high expectation stocks, time is a real cost. This is especially important for pre-revenue or early commercial nuclear companies. The market can tolerate uncertainty during a hype cycle, but it becomes less patient when timelines slip. It becomes less patient when capital needs rise. It becomes less patient when the first project still does not prove repeatable economics. That is the danger. Nuclear stories can sound inevitable, but individual companies are not inevitable. The sector can be right. The stock can still be wrong at the wrong price. That is the hard-edged view. AI power demand may be real. Advanced nuclear may matter, but the path from concept to operating fleet is long, and the market may be compressing that timeline too aggressively. Key signals to watch. So what should viewers watch next? Not the headlines, not the social media reaction, not just a stock chart. Watch the survival signals. First, watch Oklo's licensing progress. The key question is whether the DOE pathway turns into real engineering validation and whether the NRC path becomes clearer over time. A DOE milestone can help the story, but the market needs to see whether that eventually translates into a commercial licensing framework. Second, watch NuScale's customer pipeline. NuScale has the regulatory edge, but the market needs to see demand that is not theoretical. Hyperscalers, utilities, industrial customers, and international buyers need to move from interest to bankable commitments. Interest is not the same as a project. A memorandum is not the same as a plant. A presentation is not the same as cash flow. Third, watch power purchase agreements. This may become the most important signal. A serious PPA tells the market that a customer is willing to underwrite the economics. Without that, the story stays abstract. With that, the story becomes more investable. Fourth, watch the first reactor timeline. The first project matters because it changes the market conversation. Before the first reactor, investors are pricing probability. After the first reactor, investors can begin pricing repeatability. That is a very different model. Fifth, watch unit economics. Cost per megawatt hour matters. Factory-built modular language sounds attractive, but the real question is whether these companies can deliver power at prices that customers can justify, especially when natural gas, grid upgrades, renewables, batteries, and existing nuclear assets are also competing for capital. Sixth, watch fuel supply. Many advanced reactor designs depend on HALEU. The Department of Energy says HALEU is enriched between 5% and less than 20% uranium-235 and is required for most U.S. advanced reactors to achieve smaller designs. DOE also says its HALEU availability program is intended to support additional production and private investment in the nuclear fuel supply chain. That makes fuel a strategic variable, not a footnote. If fuel supply is constrained, deployment is constrained. If deployment is constrained, revenue timelines are constrained. And if revenue timelines are constrained, valuations become more fragile. That is why this story is not just about nuclear optimism. It is about execution risk. Mid-video CTA. By the way, this is exactly the kind of market layer I'm tracking on this channel. Not just NVIDIA, not just AI software. The hidden infrastructure behind the AITrade. Power, nuclear energy, the grid, data centers, memory, natural gas, electrical equipment, and the companies that may sit behind the next rotation. If you want more breakdowns like this, subscribe to the channel, because the AITrade is no longer just about chips. It is moving into the infrastructure that keeps the entire machine running. Final takeaway. Here is the clean takeaway. Oklo has the AI hype. NuScale has the NRC edge, but both still need to prove the same thing. Commercial survival. NuScale's advantage is regulatory credibility. Its problem is commercialization confidence. The carbon-free power project termination showed that even a serious SMR design can still struggle if the economics and subscriptions do not line up. Oklo's advantage is narrative power. Its problem is regulatory proof. The DOE pathway improves the story, But investors still need to watch how the licensing and commercialization path develops from here. That is the split. NuScale looks more like the regulatory leader. Oklo looks more like the narrative leader. But neither one has fully proven the repeatable commercial model. That is why this is not a simple winner versus loser episode. It is a pricing episode. The market may be pricing the future of AI power, but it may not be fully pricing the time, cost, and regulatory friction required to get there. And that is where the opportunity and the risk both live. If AI power becomes one of the biggest bottlenecks in the market, SMRs could stay inside the Wall Street conversation. But if timelines stretch, costs rise, or customers hesitate, the same stocks can reprice very quickly. The signal to watch is not hype. The signal to watch is proof. Licensing proof, customer proof, PPA proof, fuel proof, first reactor proof. That is the real SMR survival game. And for now, the market is still sorting out one hard question. Does it want the company with the better story or the company with the better regulatory edge? This is not financial advice. It is a watch list framework. And in the AI infrastructure trade, nuclear may be one of the most important places to watch. Not because it is easy, but because the bottleneck is real. And the companies that survive it may define the next stage of the power trade.